Okay, good morning, everyone. My name is Scott Stevenson. I'm the Senior Vice President with BAFT. I have responsibility for all things trade. For some of you who aren't familiar with BAFT, we're the Bankers Association of Finance and Trade, and we are the leading international association of both banks, fintechs, solution providers in terms of transaction banking. And so that includes both trade as well as payments. Today, we're looking at our topic of future-proofing security and compliance with digital trade finance. And we're all familiar with the fact that enhancing security and compliance in digital trade is crucial to mitigate risks and ensure the integrity of transactions. I want to say a special thanks to SureComp, who's the official sponsor of this, and for participation of Huntington Bank as well in terms of bringing this webinar to you. I'm going to pass this over to our two featured speakers, Enno Wetzel from SureComp, pardon me, as well as Paul Waterfield from Huntington Bank, and ask them to introduce themselves. Paul?
Yeah, okay. Welcome, everybody. I'm so glad you could sign on and attend this. I hope we can share some valuable insight that we've been seeing and experiencing. My work right now is with as a managing director in global trade and treasury at Huntington National Bank. We're a regional bank that's headquartered in Columbus, Ohio. I work out of the Chicago office, and our footprint is really kind of the eastern side, northeastern side across the Ohio Valley and there. And we experience a lot of business, or we benefit from a lot of business in the manufacturing area and stuff like that. So we're active in the global trade and treasury space. My past has been in international banking. I've always been active doing this kind of work, and I've had some good experiences. And I'd say that the best experiences have always been around what's new, what's coming, what can we do to make our work better, our employees work better or easier, how can we enhance customer service. And I see a lot of things on the horizon that are really going to benefit us as international bankers in this space, working with our vendor partners to really enhance what we do, both security and compliance wise. So I was excited to be able to participate in this session today.
Yeah, thanks, Paul. My name is Enno. I'm heading the business strategy, business development and digitization at SureComp. We're the global leading provider of banks and corporates with trade finance software. So while being a very small company compared to the size of banks, we serve them all over the globe. So we serve around 250 banks worldwide, not only in the United States and North America, but Europe, Asia, Africa, Latin America. So I guess except for the Antarctic, we serve on all continents in over 80 countries. And we consider ourselves to be the experts and the leaders in the trade finance space. And when Paul alluded on the most interesting part is what's new, this is exactly what keeps me busy, making sure that our solutions stay relevant for the users tomorrow, basically. And Paul already gave a small intro into the moving area of new requirements, the regulatory pressure that's coming, the IT security, the challenges that we all faced with and our customers and users are faced with. And I'm super excited to be here today to discuss some of them.
Thanks, Enno. Thanks, Paul. We're going to go to a poll question, which we'll put on, but I'd also like to say that if you have additional questions, they could be placed in the Q&A section, and we'll get to as many of them as we can. And those that we can't address during this hour that we're together, we'll do our best to get back to you with answers to any and all of them. So thanks. So our first question is really about what is your biggest challenge? pain point in terms of trade finance? Is it efficiency, security, compliance, connectivity, IT resources, talent acquisition, retention? So if you could kind of give us a response again, we will ask. Let me see. For some reason or other, I apologize, audience. I'm not seeing the questions posted here in terms of what the major questions are. But again, the poll is: what is your biggest challenge? What is your biggest pain point? Is it efficiency, security, compliance, connectivity, IT resource constraints, or talent management?
Scott, are you not able to see the results?
I do not.
All right, so I'll play voice of God and give you all the results, okay? So we have 62% responded compliance. We had 57 say efficiency. We had 48% say talent acquisition and retention. And then we had around 10 to 15% say security, connectivity, and IT resource constraints.
Okay, great. So, I mean, looking at that, starting with compliance, seemed to be the highest response. Paul and Enno, what is your take on that?
Enno, do you want to start?
Well, happy to start. I mean, for a reason, we headed this webinar with compliance and security because we definitely copy these priorities when talking to our customers. Compliance is the #1 topic because it has the downside risk of not being able to continue the business if the operations of the business aren't compliant, and the regulatory requirements in terms of compliance are only ever growing. But then I guess, and that's why I'm so happy that we did this poll, efficiency and talent retention are ranked second and third, and somehow they go together, right? A number of the banks that we serve ask us whether our solutions can increase their efficiency. And it's on the one side, the clear and ever ongoing chase for economic efficiency, to just spend less of the dollar to earn a dollar. But then on the other hand, it's the lever to face the challenge of the talent retention. Because if people are leaving the organization and you can't recruit new talented people, then you need to become more efficient to continue being able to do the job. And Paul, I guess that that may or may not resolve with how you see the business, right?
No, I see the picture just about the same. I would add in there, from my experience in trade finance in the bank, you have two factors. If you onboard a new person to a new position, you not only are training them today in the job, in whatever they're doing in processing transactions, or managing the transactions, understanding all of the rules around the transactions themselves, such as letters of credit and collections, but you have a huge compliance component as well. And when you go through an exam and you meet with examiners, and all of a sudden there's a new buzzword out there, is you should be checking this or doing that. Are our filters that are checking these transactions current, or are they up to date? There's an added responsibility on that person to make sure that all of those other things are working as well. That if they see red flags, they raise that. There's just a lot to learn, and the expectation is that you would be efficient enough to contribute to the team quickly. And it's just there's a lot there. So I think as we look at how we look at this, go down the road, we've done a lot in dealing with compliance. But to the extent that we can even get that process more into a digital environment where a lot of that can take place at the background, and allow the talent that you have to decision those transactions from a compliance perspective, raises the value of that employee, but at the same time keeps the bank safe and secure from any bad actors out there that might cause harm.
Well, absolutely. And one other aspect that, again, some of our customers are bringing forward to us is that the increased level of compliance demand puts a lot of say, emotional stress on the employees, because all of a sudden their main task becomes making sure that you tick the boxes. And if you don't do it right, then you immediately feel the personal responsibility. And it may be a perceived one, but it's definitely, and we know, right, perception may be reality. You may feel personally liable to making it right. And so you ask for system support. So can there be a system, please, that is guiding me through the process and eventually logging that I did it right, so that if a years later the auditor comes in and say, hey, Enno, did you check that transaction right? I can go to the log and say, yes, listen, I checked against that list. It was current at the time. If things changed afterwards, sorry, with all due respect, not my responsibility as the operator. And so this is another aspect that a strong system, one that can update itself on a regular and frequent basis, one that provides full and thorough logs, making sure that the operator is doing it right, can also reduce the mental load of the operators, which in turn may lead to people staying longer with the bank because they can focus on the interesting part of the job, as you said, right? Decision making. Can I, as a bank, support that business, which is ultimately why we're here in the first place, right? To support the business. And we're not here in the first place to tick the boxes of the compliance checklist, right?
Yeah, there's always this creative tension between compliance and clients, you know, our trade operations are always kind of caught in between. You can recover from a credit loss, you can recover from sometimes an operating loss, but the greatest fear of senior management in our member organizations is you can't recover from reputational loss. And that's in this area of sanctions, what's tending to drive the businesses these days. Now, what role can technology and digitization play in addressing some of these challenges?
Well, maybe if I put my thoughts out here, I guess the role that we as a trade finance vendor, I say, write to our own books is enable the banks, the users, to grow their business. And we saw that despite topic number one being compliance, which, as we discussed briefly, has the tendency to rather limit the business, we want to bring the features, the functionalities to the banks to grow the business. So taking a compliant approach and bring technology functionality to the banks to grow the business. Now, what can that be? As I just started to say, taking a platform, enabling the banks to use it as a service, right? Don't ask the internal IT staff to implement it or to hardwire it with other systems in the bank, but just use the service as it is to be fast in scaling and enabling the bank to do more business. Connecting the dots of the broad trade finance ecosystem with a number of platforms. And I guess one of the questions that typically is out there, will there be the one platform going forward that will be the one that is ruling it? No, I don't believe it. It won't, right? We need to enable the banks to be open to connect to wherever the business is. And if the business comes from yet another platform, the platform of choice of the bank should be able to connect to that platform. So that, to me, in a nutshell, is what is the role of the leading IT vendors to enable the banks to grow their business despite and in full compliance with all the regulatory requirements.
I would add to that. That's good. You know, I really look at the compliance piece being a lot of manual, and not manual checking, but knowing you've got to check documents, you've got to go through that process for compliance. But another factor in there, and it's a big part of the roles of our frontline folks, is really looking at the interaction with the customer to know what's when we interact with the customer, is this a good transaction or is this a bad transaction? And really try to develop more front-end compliance with understanding that doesn't work that way, or that's a red flag. We would stop there, or let's look at this transaction. It doesn't make sense being structured like that because that increases the risk in it, and spending more time there. And oftentimes I don't think we have staff time to do a lot of that. We just get the transaction in process. And to the extent that we're compliance checking it on the backside and reviewing it and doing it, not that we delay the compliance piece, but it goes along with what I said in my earlier comments. We're allowing employees to do more, empower them to do more as a manager in that transaction, in their interactions with the customer, knowing that we've got more robust compliance checking behind us as well. So I think there's another value add there to the talent and acquisition, keeping employees, happy in their jobs, knowing that they're structuring transactions, solving problems, and doing that kind of stuff.
Yeah. So maybe doing more of the interesting parts, right? And less of the repetitive. I don't say low value adding, because the value of having a compliant transaction, as been said, is outstandingly high, but the interesting part of the job should be more, right?
Yes. Yeah.
Paul, how do you see digitization allowing your staff to repurpose their role?
If in the digital space, where we can look at some of the new systems coming out in the AI environment, where you can OCR scan documents and using AI to scrub those documents for OFAC and all the other sanction requirements and all of those other pieces that are there. I think everybody initially says, we don't need as many document checkers. And I would say that's not the case. That's not the case. We can get back to where we were before, with being able to spend more time with customers, understanding their transactions and helping them grow their business, rather than just catching transactions as they come in, because we're already working, 60-hour weeks checking documents and doing that. The thought that we can get to a digital space where we are examining documents for compliance, we're examining documents for against a letter of credit, and minimizing the amount of time that a worker has to manage that transaction and then look for discrepancies, moves their time to be able to be more of a decision maker on those discrepancies the system might find. So if the scan goes through and 5 minutes later, you've got a sheet in front of you on the screen that says you've got 3 discrepancies, it's decisioning those discrepancies against the knowledge. It also is a huge efficiency boost where you can do those transactions as you've been doing, maybe a set of 4 eyes on the transaction. Maybe you have 2 reviews. Maybe that AI system is the first review, and then you have the second review. And that, again, enhances that employee, because they're more of a manager of the transaction. They're not just a document checker. I think a lot of employees, they value that document checker role, but I don't know of anyone that wouldn't be excited to see that there's a way to do this a little bit more efficiently, to not spend as much time checking the documents, but more on what the system found. And then also knowing there's a compliance check behind it. When you look at those employees that are doing that today, there's a lot of other things that we don't necessarily do on a routine basis. And it gets down to customer service and all those types of things that we can push more information, more business analytics to clients, do maybe more robust reporting. That's all repurposing those employees that may have been spending a lot of their time on document checking. They can become more of a manager of those transactions and enhance that customer experience to help grow the business.
Yeah, and fully buy into this one. And I guess, again, what could be the role of an IT vendor in this? The process that, Paul, you outlined requires a lot of different specialized systems to support that flow. Right now, typically, not every single bank would have all of these systems at their fingertips. So what we could do is provide the banks with the service to consume exactly those type of functionalities that the bank wants to get this process, as you described it, done. And say maybe taking a step back and a little bit outside the trade finance, and Scott, you introduced BAFT as the transaction banking. So looking at the payments, right? There is 99.999% straight through processing. Well, we won't get to that in the trade finance space anytime soon. But realistically, if we can equip the banks with an 80% pre-checked transaction and focus the manual work, the experience, the knowledgeable person to look at the last 20% and policy phrase it like being the manager of the transaction, then we've created a value. And how do we get to the 80% pre-checked transaction? Well, by combining latest technology, eventually an AI engine to do some of the miracle, combining OCR functionality to turn paper into data in the first place, analyze data, find anomalies or hint to anomalies. But that's what we as the vendor can do. And then you as the bank user, you can say, well, my operations people, which have been trained over the past many years to find the odd one out transaction, the one that you don't want to pursue, right? Well, you can focus the colleagues on doing exactly this, where they provide the biggest value and expectedly have the greatest fun in doing it, right?
Yeah, excellent.
So
Thanks.
John, before we move to the next topic, we have a question. This one is for you specifically, Paul. I think you're going to like this one. Why does it seem like different banks have different compliance requirements? If a client banks with two different banks, they seem to have different experiences in terms of compliance. I'm sure you've all heard this. You're the only bank asking these details. How do you address this at your bank?
I think I can speak for a number of banks. We all seem to share that story and do that. Sometimes you're tempted as a banker to call that other bank and say, how are you looking at this differently than me? And I've actually done that on occasion because I would like to understand what they're seeing that I don't see, or they're not seeing something I do see. Banks oftentimes can kind of exchange notes as to what we do as a best practice. But from the standpoint of understanding what our requirements are at Huntington, we have to follow our rules. We have to. We're not going to bend those. We do have ways to escalate stuff. We do have an excellent compliance team that is really on spot, understanding our trade transactions, so we can circulate it amongst a number of people within the bank. And I would say, for the most part, if we're good at explaining what the transaction is and why we might say that we shouldn't move forward or why we should, at least we know we're always getting the attention of those folks to understand it. And if another bank is willing to do that, I'm sorry, we don't have the latitude to just say, well, the bank down the street is doing it that way, we can do it that way as well. This is why we won't. And hopefully then the customer understands that we're doing it for their protection as well. And if it was wrong, then we don't want them to get into trouble. We want to take care of our client, and customer does come first. We want to make sure that they're protected. We look out for them. So we'll do our due diligence on understanding what the issue is and comparing it to maybe other standard practice. But for the most part, the bottom line is we're looking out for the customer. And if we think it is wrong, we've got to stand by that.
And maybe even though it wasn't addressed to me, just one other additional perspective to it. I guess one aspect of differentiation may be from a regional to a global bank, where say a bank that is operating in one jurisdiction, say the United States, has to comply with the United States compliance rules, no doubt. Then there may be a global bank that on top may have to comply with the UK legislation, the EU legislation, the Singapore legislation, or the Hong Kong legislation, just to name, say, the major ones. And there is that Wolfsberg group that tries to harmonize the questions that typically are being asked. And then there is some variation on top of it. So some of the variation, again, on top of what, Paul, you've been saying about protecting the customer, also comes from the different regional setup of the banks that may exist. And we see that from implementing our systems across the globe at various types of financial institutions, that not all of them do apply the very same and consistent set of compliance rules, simply because they're not exposed to all the compliance requirements that do exist in the globe.
Thanks. With that, we'll go to our second poll question. And if Matt, if I could ask you to put it up, approximately what percentage of your IT budget is spent on innovation? And there's a couple of less than 5%, 10%, 25%, 50%, or more than 75%. If you could indicate your responses, and then we'll discuss with our panel. When those results
Really curious to
when
see
those
that.
results are in, Matt, if you could read out the results.
All right, assuming you still can't see these, the winner here, 36% is 10%, followed by 50% is 32%, followed by 25%, and then less than 5% was 12% of the audience. Nobody said greater than 75% though.
Would have been a
Okay.
surprise.
So what's your takeaway from that?
Well, maybe just a quick, because it's, we just discussed a range of basically innovation requests, right? To support such a flow of pre-approved transactions with latest technology like OCR and AI engine, etc., where you need to innovate, you need to bring new functionality. And if you can spend less than 10% of the overall IT budget that's available for the trade finance department on innovation, it might take you longer than you'd wish, to say the least, to bring these functionalities. And fantastic to see some banks or some respondents that say you spend 50% on innovation, which is great. It's a little more than we typically hear. The 10-15% is way more familiar to what we know. Glad to see there are banks that can spend 50% of their budget on innovation.
I would say I'm a little surprised by the higher number for innovation, because I think there's a lot of regulatory requirements on our IT folks, and while everyone deals with a limited budget, it's not that they've cut their budget. I mean, it's just the demand on our IT resources continues to grow, and regulatory issues that need to be done can rise to the top. The next thing you've got are things that really provide and drive new revenue to the bank. And in this space, looking at these types of things that we're talking about today with AI for compliance and security and doing all those things around our trade finance transactions, I don't see us necessarily moving the needle immediately because there's any new product involved. It's efficiency that drives it. It's our ability to do transactions in a safer and more secure environment. Our risk partners, our audit partners, our compliance partners really have to be part of the business case to drive this new innovation and technology. We just can't say we're going to grow the top line or bottom line by X%, because we need efficiency, and this is overdue. It's something that we should really embrace and look for solutions. But to the extent that the business case is it's a different animal this time. It's going to be different, and we've got to check the boxes and include other partners in the bank to just say, yeah, no, we need to support this. We greatly advance our compliance. We greatly advance the efficiency in the department, and we can repurpose employees, train them to do some new things, more innovative things with customer transactions. Business analytics is greatly enhanced. Trade finance, oftentimes, I think in some banks, really kind of it's not in the back burner all the time, but to the extent that it really operates within a pretty regular environment, because we have so many regulations already with ISP and UCP. I mean, we're doing things pretty much the same. And to drive new business, we want other efficiencies. So to look at the AI solutions and say, what can I do differently with this solution? Well, I can enhance the employee experience, because that's an important factor. It always is. And to the extent that we can help a customer, now maybe we can pre-check documents without putting a burden on the operations staff. We could pre-check documents, so when we get them, they're already compliant with the letter of credit. Maybe we can do compliance screening more efficiently without the fear that the employee, the worker is missing something that they needed to do. and they live with that fear that someone's going to come back to them and say, hey, you missed this. This was really, this is something we got to bring everybody's attention to, and relax that environment a bit, because we know the system is doing it, and we manage that work rather than just try to input it and work in that environment. So I guess I see it as really an exciting time, but I think we've got to step back and say, yeah, this is innovation, but a lot of that innovation and the time spent onboarding any of these new systems really falls back on the department, on the workers, because we would be the front line really to help stand up this system more so than we'd ever with a back office system that requires a lot more IT work on interfaces and things like that. So it's exciting, and I think we just need to really step out and say, hey, let's lead this. We need to be part of this, and this is really going to enhance our business. The last thing I'd say is, from the regulatory standpoint, you know, as some of these new tools available to us catch on, it's not going to be too long before the regulators create that expectation that you're using some of these systems, and you don't want to be too far behind as that evolves, because you don't want to be the bank that is, oh, we haven't examined a bank that's doing this manually, or we haven't done this for, I mean, that would be a check mark on the wrong box. And so to the extent that trade finance shops should pay attention, I think this is really kind of a time that we can say, you know, hey, this is exciting. Let's embrace this and see how we can make this work.
Absolutely, and not trying to combine the 10% on innovation with the need to embrace it. That's exactly how a number of vendors, not only ourselves, are also adjusting the way we make innovation or new functionality available with the advance of SaaS solutions, where you don't have to do all this heavy lifting of implementing and installing solutions in your own IT environment, but you can not only technically consume them as a service, but also financially, right? With a subscription model, can definitely lower the financial burden to the bank and the business case. And you alluded a lot to it, which is right and necessary these days. The business case gets much more straightforward, because the cost to the bank is much lower by consuming it as a service. And that's why these business models from the vendors have evolved, because we're aware that there's a very limited budget available for innovation, which of course in the end will also pay into the compliance side and security side of things.
Yeah, no, I totally agree. And I applaud the vendors like yourselves that really, in a word to all the vendors, the more that you can work at being able to stand up a new system quickly out of the box, it is better, because I think the day has passed when we can spend 18 months trying to onboard a new system in the back office and do some of those types of things. We just don't have the resources possibly, or we don't have the time or the staff time. You know, we just have to be making use of it, but it's got to be as much out of the box as possible so we can get
Absolutely.
a quick return on the investment.
I was just talking. Yeah, sorry. Go ahead.
No, I was going to say with that, let's go to our next poll question, because it follows on. And Matt, if I could ask you to post it, but when did your organization deploy its trade finance system? Less than a year ago, 1 to 4 years ago, 5 to 10 years, or we don't have a system? So your responses are welcome.
So I'll announce these in real time for you, Scott. You've advanced here. So overwhelmingly right now, we have 60% are saying 5 to 10 years, followed by 30% saying 1 to 4 years. 10% say we don't have a system, and we don't have any that say less than a year ago. So I'm going to end it now because we're at 45 seconds. So the winner was 63%, 5 to 10 years. 27% 1 to 4 years ago, and then 10% we don't have a system.
Thanks, Matt. Your take on that, Enno?
Well, I guess it summarizes briefly what we discussed. If your system is 5 to 10 years old, so say on average maybe 7 years old, you have it on-prem, right? Because 7 years ago, banks weren't adopting SaaS solutions, even though some vendors were already out with SaaS solutions. The minute you have your system on-prem, you're cut off from the innovation path, right? Because the SaaS system, every 3 months, we bring new functionality to our SaaS solutions. So our users will benefit every 3 months, quarter by quarter, from innovation. If you have it on-prem, well, you have it on-prem, right? And you have that functional scope on-prem. So there is a huge group of banks, and presumably the 30% that said, well, 1 to 4 years ago, the majority of these banks still has their system on-prem, why the SaaS share might have grown. But the vast majority of banks has chosen a path where they're not automatically enjoying the benefits of innovation that the vendor is bringing. And that, again, it summarizes the situation of need that we were discussing, that the banks are in need to embrace innovation, and they want to do it to provide better service to their customers, yet it requires additional investment, which is scarce. So all the topics that we've been discussing.
You know, just for the benefit of those who are not tech savvy, could you explain the acronym of Prem and SaaS?
Of course. Well, on-prem is the short for installing an IT system in your own premises. So typically your IT department will have a physical room with some servers where the IT system that you in the bank are using is installed. Well, that means on-prem, so on-premise. The opposite to that is consuming a solution as a service, so software as a service, SaaS, where basically like Zoom, right? So we're all connected to Zoom, which is run in the cloud, and we're all just using Zoom as a service today. And we don't have it installed in our data room. And therefore, if Zoom brings a new version of it, we all enjoy the benefits of it immediately. And same is true in the trade finance space. Vendors like ourselves, but others too, are bringing their new products as software as a service. So it's web-based. Bank operators would log in either via single sign-on or via web browser and use the solution rather than having a 18 months installation project until they can actually use it. And with a SaaS solution, as Paul said, right, it's already there. There may be an onboarding of 10 weeks and you're up and running, right? And imagine the benefit of an 18 months implementation project versus a 10 weeks onboarding. Well, in the 3rd month, you're productive, you're ready, and you can serve your customers with the new solution. This is immediate and direct business benefit.
Paul, do you have a take on it? On the
the only thing I would add to that was well said. I think from the standpoint of just looking at your overall solutions, I know that there's a number of banks that have older back office systems that are just really stable and they do what they need to do. And you know, I think the excitement I see is at some point in time, yeah, those we need to upgrade those. But some of the new technology with AI on the compliance side and doc checking, I think are really some fast movers to help us work with a system that we can stand up separately and really do that. And at the same time as the vendors for the back office systems develop new systems and more enhanced systems, then digest that at some point in time. But I think there for them from the efficiency rating, there's so many things we could do just become more efficient quickly. That's where I guess I see a lot of focus and excitement.
You know, interestingly, a recent poll that we had within BAFT of senior management, the question was asked, what is driving digitalization in your organization? Is it clients driving it, or is it a desire for efficiency? And overwhelmingly, the answer was drive for internal efficiency. In many instances, the clients are not asking for digital solutions as of yet. Now, our discussion of technology, our discussion of new systems, it would seem that there would be a natural, like a mass movement towards adaptation of digitalization, of tech adaptation. What are the barriers? Why aren't we seeing that movement happen to the pace that would be expected?
Well, I guess it's so when I joined Surecom 3 years ago, I was talking to other tech people, and they told me, listen, it's not about technology. And I was a bit shocked because I was joining a tech vendor, and they said, no, it's not about technology. It's about providing business value, right? And then I was talking to a corporate of ours using one of our systems, and I asked him why he's not adopting the digital guarantee. And he said, I don't care. If I can grow my business on the back of a paper-based process, I will, right? And he was pointed in his answer. And in the end, he will adopt the digital guarantee, but he wanted to tease me. And he said, it's about the business process. If the customer can grow its business, the choice of technology is secondary, right? Now, we think that the choice of technology should be able to foster business. Well, if that's the case, we need to argue, and we eventually need to provide better arguments why we are convinced that adoption of new technology does actually foster the business, right? But we've seen in the past, especially 2022, we've seen a number of tech-driven consortiums or blockchain-driven vendors going down. Why? Because apparently they were not successful in arguing the value of adopting these new blockchain-based tech-driven solutions. So even as an IT vendor, we always need to be super close to the notion of the added value. So if I wanted to sell a new solution to Paul, he would challenge me on what's in for me. It's a very simple question, a very tough one if I just argue with technology. Now, if I can tell him, Paul, I can make your organization X% more efficient. Oh, all of a sudden we'd be talking. Enno, how do you do this? Well, I apply that new piece of technology. Ah, interesting. Okay, is it future-proof? Is it doing the job? But then we're in discussion, right? But if I start the discussion, Paul, would you want to apply AI? Yeah, and then yeah, yes and no. Yeah.
One thing, I know we haven't really talked about, but the other enhancement that you really can drive some new business that would be a real plus, if as we would use AI to do document checking, that greatly enhances our service level agreements. To be able to say, yes, we can get back to you by the end of the day because we can do our first screen on the documents and know where we're at. And to the extent that gets a customer's attention, it does. It does. They want to get their money. They want to get paid. If they're financing off of the transaction, they want to get that in place. To the extent that we can leverage SLAs to those clients and be a big part of what we can promise to them, that would be huge. And again, that also speaks to the talent and the employees that would benefit from not having to rush through checking 6 sets of documents in the next hour and a half, just to know that they could get back to that customer because that's what we promised them. It just creates a better environment. It's more efficiency. And yeah, it's also a lead talking point when we make a customer call and say, we can now offer this.
Exactly. And here you go, right? You're linking the AI application of doc checking directly to better service that you can provide to your customers.
Yeah.
And if I tell you tomorrow, it's not AI, it's technology XYZ, you wouldn't care if you can provide better SLAs and win more business. But then we'd be looking into technology XYZ. And that's the point. So I guess the barriers to adopt tech innovation isn't around the technology. So it's not about whether blockchain is a fit or a complicated solution. If it does the job, if it increases the business value to the users, we're in business. We're in business, right? And tech is the supporting element, or as we say, the enabling element for value creation.
Yeah.
Paul, I have a question here from our audience. I'm sorry, this one will go to Enno.
Okay.
How does a system vendor keep up with the changes in the industry, such as ISO 20022? Do you develop new versions of your application or you update your existing solution?
Very good question. Any type of innovation, industry changes, be it the ISO 222 or the move towards XML messages in the trade finance space or the API implementation comes super easy in hosted SaaS solutions. So our platform SaaS solution is already Swift 23 enabled, is already API enabled, is already ISO 222 enabled. Why? Because it's one-time development for us and every user can use it. Now, if the banks are running systems on their own premises that have been installed 5 to 10 years ago, well, we would always innovate the product version of it. And then there is a project necessary to upgrade the very specific version that the bank is running. This is something that no tech vendor can ever change, that logic, right? That's the way we keep up. And that's why we're inviting more and more of our customers to join the SaaS bandwagon, basically, because it's the arguments are at hand to say, well, dear bank, in the long run, and hopefully also already in the short term, this is preferential for everyone, right? Because you'd always be up to date with regulatory changes, with compliance changes, with security enhancements. I guess we all remember a few years ago when there were security leaks found in Java versions that everyone was using, right? And there was overnight work necessary for all the banks in small projects. This is out of the box in SaaS solutions. Hope that answers the question of how vendors keep up. I guess it's how we as an industry keep up.
This kind of leads us also to the question. At times, people are saying, how do we know that cloud is secure? I mean, how do we know that it's a secure environment in terms of our data?
But that's a very, very good question. And again, I think it's the power of the mass, right? If you compare that to what's the alternative? The alternative that is that you have your data in your own data center on premise. Well, what's the security level you have there? How many experts do you have that keep that data center secure? And what's the likelihood of specialists doing their job better than small teams are doing it across the regions? And I would always argue that when we're specializing our teams in trade finance operations and doc checking, right? It's specialized teams where we're convinced that they do their job outstandingly good. And there's hardly other people that can do it better. I would argue same applies for SaaS data centers, where there's teams that do nothing but securing these data in SaaS data centers, in cloud data centers. And so far, I think, prove to the cloud vendors, there is less successful data attacks on cloud centers than on on-premise data centers.
Okay, thanks for that. I mean, one of the things that in the past there was always seen to be kind of a creative tension between vendors and banks. And not too recent past, banks were afraid that fintechs were going to take their business, and fintechs were afraid that banks were getting in the way of them expanding. That collaboration seems to have enhanced greatly. Would you comment on that? Both from a bank standpoint of you, Paul, but also as a vendor.
Speaking from a bank standpoint, I would say throughout my career, I've always enjoyed good relations with the vendors, and mostly because I really see them as a strong partner. You could easily get frustrated because something's not on the time frame or things like that. But those are small things compared to if you've done your homework up front in your business case, and you've really understood that that's the product that fits what you're trying to do. It's really a partnership. And as I've been familiar with vendors, it doesn't take long to see a vendor that really does care about that relationship and want to make things work. It's just like our business. People represent us, and the same thing with the vendor. The people that you talk to at the vendor represent that vendor as well. And everybody in our space in trade finance, we have similar products, pretty much the same products. So when we look for differentiation to do something different or better or faster, we're going to look for a vendor that's forward looking. We're going to look for a vendor that's really got, maybe more out of the box solution and things like that. But to the extent that there's been any competitive piece there, no, I see it really as it being a way to really enhance what we do through that partnership.
And fully copy that one. We need both. We as the vendor, we need the banks using our solutions. Otherwise, we can't be profitable. We need to be profitable to innovate, and we need to stick to our business, right? Our business is technology. Our business is not banking. So where we always draw the very red line is we don't interfere with the business the banks are doing, right? So we support the transactions by means of carrying the data, enabling an efficient communication between corporates and financial institutions. But we don't interfere with the business itself. So taking money based on the volume of the transaction, well, I would argue that's the risk business the banks are engaged in. That belongs to the bank. We don't take a margin share because it's not our business. But we will take money for the use of our IT software, yes, because that provides value to the banks. But if we all respect each other's business, this is the basis for a fully copy Paul, right? A long-standing partnership between vendors and banks, right? But we need to respect our individuals' business, right? And hopefully area of competence.
Yeah, this area of collaboration is of extreme importance to BAFT. One of our leading banks gave us the statistic that of all the banks that are competing in the trade finance space, the single largest market share is 6%. So 6%. So that means that any cost of innovation, of technical change is going to be very expensive. And there are a lot of areas where banks can collaborate without fear of crossing over to collusive or monopolistic behavior. And so this area of technology is really one where we see collaboration as an open space to see a lot of progress in. We're kind of coming to the last of our questions, and it really has to do with future proofing and how to approach digital adaptation or migration. And from a bank standpoint or from a technology provider standpoint, what are the next steps?
I guess I would throw out that, if I look down the road as we do, planning and we want to know what our business is going to look like or project what our business will look like 2 years, 3 years, 5 years, 10 years from now, future proofing to us in that environment in the trade space really comes down to how are we getting the job done? What technology are we using? How are we future proofing, making sure we've got the right systems in place to do a lot of what we're talking about today? And really, how do we manage this oncoming retirement roll off of longtime employees that have been in some of our shops for 20 or 30, maybe even 40 years doing this work. And we're losing and projecting to lose a lot of industry expertise through those retirements. And we also seem to have some challenges in bringing new employees in that want to try to do what we're doing exactly as we are today. And that's learning how to manually check documents, how to check documents for compliance. And quite honestly, that's not appealing to everybody. It's just not. And, to the extent that people want to grow in their position quickly and look for advancement, you've got a long lead time in our trade finance space to learn all of the ins and outs of the compliance and document checking and rules and regulations. So to the extent that we can work to enhance that early on customer employee experience, as well as how do we manage the disappearance of some of this industry expertise that we have today in working through these transactions, we've got to rely on a little bit more. We've got to rely more on technology, but at the same time, we've got to create an environment where we can attract new employees. And I see there just being a stretch there at the time right now. We've at Huntington, we've been very lucky to add some new employees in the ops area that have had experience in the past, because now they can work remotely. So to the extent that we can do some of that to enhance the experience and get employees that have been trained on board, that's been a great advantage for us. But to the extent that, we're going to run out of that pool, we're going to have to get back to business and making sure we're attracting employees that see this as a good career.
And maybe adding to these points from a vendor's perspective, future-proofing means that if you want to take your decision now on what technology you apply, you should never be in a position that you need to regret that type of decision the day after tomorrow, right? So coming back to your 6% market share for the leader in the space, that requires that everyone is open and technically able to communicate and collaborate with everyone. Otherwise, trade finance business wouldn't work. And the same must be true for the vendors. So whatever system you're using, whatever platform you're deciding to choose and to use, it needs to be open designed from a technology point of view, and from a vendor that embraces that collaboration notion in their business strategy, so that it will be connected and connectable to the ecosystem as it evolves. Because honestly, we don't know where the ecosystem will be in 5 years' time. But as we just saw in the poll, right, the systems are there to stay for 5 to 10 years. And over that time, you need to be able to support the business as it evolves. And therefore, to us, that notion of collaboration and openness is key to enable the banks to be future-proof when it comes to choosing IT systems to support their business.
Okay, thanks. Just before we wrap up, we had one last question. And what is the accuracy level of doc check by AI? Is there any verifiable information available on this based on the vendors who are providing this solution?
Happy to take that very quickly. I mentioned earlier that we won't reach that 99.9999 level of straight-through processing. But if we can enable the bank's teams to get an 80–90% pre-checked transaction, I guess then we're good. And there are systems that can work up to that 80%, 85% level. And then it very much depends on the structure of your business, whether you have a lot of English printed documents or whether you have Mandarin in a lot and your system is trained to the English versus the Mandarin. There are fine-tunes, but say 85% should be a level of accuracy that some systems are able to produce.
Thanks.
I would add to that, it would be an interesting statistic to see what our level of accuracy is today in manually checking the documents as a comparison, because I don't think we think that's maybe necessarily 100% either. My familiarity with some of the systems that are out there, and one bank that has been using a system for a period of time, they've gotten it to the 90s. They've been really happy with the way it's been working. So I think Enno's guideline that you start out in probably the 80s, 85%. But as the systems season themselves and get used to looking at more and more documents and transactions, that number can continue to grow. The same as you hire an employee to check documents and their accuracy might be 60%. Over time, their efficiency and their accuracy grows as well. So to the extent that it's a system that can do that. So
okay. Well, look, I really want to thank you, Paul, and Enno, in particular, SureComp, for sponsoring this event. We're at the top of the hour. I hope it was informative for attendees, and thanks, and enjoy the rest of your day, everyone. Thank you.
Thank you, BAFT, for sponsoring it as well too. Thank you, and thank you, Enno.
Thank you all very much.
Okay.
Particularly the audience.
Okay.
Bye now.
Thanks. Bye-bye.